Welcome back. You're tuned into Bazaar Morning Call here on CNBC TV 18. As promised, Deepan Mehta, Director of Elixir Equity, joins us on the show. Hi, Deepan. Good morning and good to see you win. Well, let's talk about UPL. They promised the street that they're going to do something about their balance sheet, which included a rights issue. Now they've gone ahead and diluted some stake in one of their subsidiaries. And this will be a relief to them. What's your view on the stock? It's been an underperformer. The industry they're in seems to be in a bit of a tizzy. But this news is good.
Nigel, good morning and thank you for having me on your show. See, I think over the years, UPL has done so many acquisitions and it has completely complicated their revenue structure, holding structure, and business operations. And they are present across the world, I think in Latin America, Europe, US, Australia as well. And therefore, what happens is that even if one or two regions do well, other two regions do badly. And because of that, there's a lot of volatility in their earnings. And lately, because of very poor global industry trends, we have seen the company suffering losses as well. And I think steps are being taken in the right direction in terms of deleveraging the balance sheet. But on the whole, the entire business structure and the way, its presence in so many markets and its past track record doesn't inspire confidence. So if on account of this news, the stock price does rally, in my opinion, it's a good opportunity to exit out of the stock.
Okay.
All right, that's UPL. Deepan, hi, good morning. I was going to ask you about PSP projects, but then the larger question has become around a lot of the other Adani Group stocks as well, right? PSP, obviously, because there's a takeover in the works. But your thoughts, if you've seen PSP and how this deal could sort of perhaps play out, and the larger issues, because we will go back to looking at if there is any sort of a negative implication for the stocks, the listed stocks here in India from the Adani Group, given the headlines coming out from both the SEC as well as the courts in the US.
Yeah, that's right. So it'll be good morning. Very difficult to say the outcome of whatever has occurred in the US. But Adani Group's acquisition of PSP and earlier of ITD Cementation is very positive for shareholders of both these companies because a lot of captive business can come to these companies. And Adani, of course, is a leading player in the infrastructure, setting up infrastructure projects. So there certainly will be a lot of advantages to these companies. As it is, we are seeing a bulging order book position for ITD Cementation and PSP project also, which built this the largest office complex, the Surat Bors. They should get a shot in the arm because of new projects which come through from Adani. And in PSP's case, the order book position was just about lagging because they had completed the largest project, as I said, the Surat Diamond Bors. And fresh order was what we were expecting in PSP. But these are good developments for both these companies. They are trading at reasonable valuations. And I do feel that a change of management over here could provide a further fillip. And I think from a long-term investment perspective, both these companies look very interesting.
No, absolutely. And by the way, Deepan, thoughts on, say, Reliance Industries, which on Tuesday before, market sold off from very low levels, were starting to come back up a little bit. But then, of course, weakness ensued. How would you rate prospects? Do you own it in the portfolio? Have you bought recently, more importantly?
Good morning, Prashant. No, we don't own Reliance in the portfolio. I think that we have seen a significant correction in the stock price. But, when you're buying Reliance, you're actually buying three companies in a single stock. And all the three companies have very different prospects and very different investor interest as well. For example, we're very positive on Reliance Retail, but not so much on the oil to chemicals. But because there's no way of buying Reliance Retail separately, that is affecting the kind of appetite which is there for Reliance Industries stocks. The management has been talking about listing these businesses separately, but I think the modus operandi is very important. If it's going to be pure play IPO, then that will mean that holding company discount will come into Reliance Industries and the stock could see even further fall. But if it's a straight split in the company, then it is very advantageous to minority shareholders and you may see a superb rally in the stock price.
No, I get that. Deepan, just one other space is life insurance companies. I think you have a slightly positive tilt. Stocks all sold off. Even in the morning when markets were rallying sharply, they were all down on FM's comments that banks should focus on their core business and not focus on selling insurance. Bank assurance is a very large channel for insurance companies. You think it was overdone? It was no directive. It was just sort of, the FM urging banks in that sense.
See, I don't know how much of that will actually fructify because at the end of the day, the commissions which the banks earn is quite significant, and it's a business which they can do easily because they have the captive customers, and bank customers also prefer to have everything under a single umbrella. So I don't know why, and I don't think it's anyway affecting the actual functioning of a bank. It's a separate division, and separate employees look at it. It in no way impacts the overall banking business. So I'm a bit surprised over there. I don't think it can materialize in a significant way. And a correction in insurance in life insurance companies on such news could be taken as an opportunity. As I said earlier, that with usual disclosure that we prefer LIC amongst the best housing companies. I think it is trading at 65% of its enterprise value, and all of the insurance companies are trading at significantly like 2-3 times their enterprise value. So from that point of view, there's a good arbitrage over there. And what we saw in PSU banks, we may see in LIC as well, where the valuation gap between both these segments tries to narrow, and that certainly benefits the shareholders of the PSU companies, in this case LIC. So very positive on that company. But as I said earlier, it's a company in which we and our clients are invested, so our views could be a bit biased.
Okay, all right. Very quickly, Dipan, before we let you go, what about Honasa? Mama Earth has come back down to earth. After going to around 500 rupees, these results were very disappointing. And for me, the problem is not so much a stock-specific issue. The problem is when the management disappoints to such an extent, it rattles investors on the whole. But let's talk about Honasa after this correction. Do you think it's come to those levels that you want to give it a look, or do you think there's not enough clarity? Stay away.
No, Nigel, I think there's full of uncertainty around Honasa. It's best to avoid it. The management hasn't done a good job in managing the expectations of investors, and such news should have been disclosed well in advance as a form of good corporate governance, but that did not happen. So I would just avoid it for the time being. It's an interesting business, but I think let's have more certainty on how its revenue visibility is before we take any plunge in it.
Got it.
Deepan, stay with us. We've got a couple of more things we want to put to you, but for now, we'll take that quick commercial break here. We'll have Sudarshan and Mitesh with technical trading ideas. Stay tuned, that's coming up. Interesting comments there, and kind of reinforcing the fact that Make in India, making defense products in India for Indian armed forces and of course for the world, is very much on track. Deepan is still with us. Deepan, that's a space which is corrected quite a bit, although we did see signs of life on Tuesday after a long time. PSUs and PSU Defense Index actually was, I think, one of the big gainers on Tuesday. Any thoughts and anything you like there?
Yeah, Prashant, I think it's an interesting space, and yes, valuations have come into the reasonable level. They were earlier very expensive. With usual disclosure that we and our clients are invested, two interesting companies come to mind, which is Hindustan Aeronautics and Bharat Dynamics. Unfortunately, the numbers for both these companies were pretty soft for the September quarter, but there's great earning visibility because of the kind of order book position they are sitting on. And in fact, I would go to the extent of stating that Hindustan Aeronautics is amongst the best defense play, considering its position and the kind of products that it manufactures and the potential in terms of new order booking. So the stock had run up significantly, and now we've seen a deep correction. It's a great entry point. Again, a disclosure that we and our clients are invested in it.
Okay, so HAL remains a pick for Dipan. Dipan, before we move on, just a word on these gas stocks, right? They have collapsed like a pack of cards, and we all know why. The reasons are very well documented. Second time round that the allocation has been reduced for them. But the fact is they're down 40-50% from the peak. Would you venture in with a buy, whether it's IGL, MGL, any of these names, or would you stay away?
No, sir, we stay away. And my heart goes out for the investors on those companies, because these are completely bolt out of the blue, and it was not factored by any analyst or research report. And these were great, cash machines steadily growing, and now you have this development. At the same time, this entire EV revolution also going to impact future demand for gas. So every rise is an opportunity to exit out of the stock, and one should be bottom picking because they've seen such a steep correction.
I just want to make a quick mention, and we'll put it out on flashes as well. GQG Partners, GQG, of course, is one of the largest investors in Adani Group stocks. It trades in Australia. It's a listed company. It's down 22% as we speak, over 20% right now. It's so that's a large cut which is coming through. We'll, as I said, we'll have it up on flashes as well. The pre-open is on, so maybe just run through the Adani Group stocks as well, because there'll be lots of interest around this in terms of what the impact, etc. is. It's on your screen. 10 lower on enterprises. Ports is down 10. Energy Solutions is down 20. And we should look at some of the others as well, which are going to come up on your screen. Green is down 20, and power is down about 20% as well. So that is a very sharp cut, which is coming through across the board on the group stocks. We'll have that up as well at the bottom of the screen. Dipen, any thoughts here on the group and the stocks here?
No, Prashant, very difficult to say at this point of time. There's just far too much uncertainty. But one can say that gradually the valuations in the Adani Group stocks were coming to reasonable levels, and earnings also have been pretty decent. But this kind of news flow certainly sours the sentiment. And in markets like this, which are anyway trending lower, bad news will have a more exaggerated effect on stock prices. So we may have to live through this uncertain and volatile period in Adani's group stock companies.
All right, Dipan, appreciate you joining in, giving us your view on a whole host of stocks. Wishing you a good day ahead. We look forward to chatting up with you, either later today or in the coming days as well.